Yeah, good morning, everybody. Hope everybody's doing all right. Thanks so much for having me, by the way, Renato, Jen, Steve from Scale Climate Action. Thank you to Green School and The Bridge, of course. So, as Renato mentioned, sorry, everything okay? Yes. All good. As Renato mentioned, I'll be talking about how to catalyze more capital, specifically for climate and sustainability ventures. So a little bit different from what Matt was talking about, but touching on some similar themes about closing that funding gap, which, as he showed, is really quite large. All right. So, first of all, who am I? Why am I qualified to talk to you about this today? So my name is Massi Hasan. You can call me Massi or Max for short. I'm Indonesian American, based in Jakarta, originally from there too, but used to live in Bali. And I know I look young, but I've actually had quite an experience in this space at the nexus of finance, tech, and impact in the last decade. So I actually started off my career in Silicon Valley. As you can tell by my Allbirds, I'm a tech bro. And basically, started working in the fintech space specifically, with a small stint in Oracle, where I realized I was not cut out for corporate America. That's another story, but you can ask me in Q&A. Was working mostly in the fintech space. There was a peer-to-peer microfinance platform called Kiva that I worked for, where I launched the direct impact investing portfolio there. And then I did a stint at Opportune, which does microfinance in the US. Then I decided to actually come back to Jakarta in 2018 to work at Gojek to build out the financial services team there. And then, long story short, after working in tech for a few years, I got burnt out, decided to move to Bali, as one does when they're burnt out, and then enroll in graduate school. So did my development economics master's degree at MIT, and it was there actually that I studied under 3 Nobel laureates, and they kept talking a lot about the nexus between climate and poverty. And that's what really got me interested in the climate space. So then I actually decided to pivot from the fintech space, and I joined a early stage fund called Catalyst Fund that mostly does investments in Africa and Latin America. So got a chance to go to Kenya, Nigeria, Mexico for work there. I'll talk a little bit more about one of the projects that I worked with Catalyst Fund in Kenya in particular, in the agriculture space. Now, what am I doing? So one of the hats that I'm wearing is with Moonshot Ventures, which I just joined last month actually, very, very new. Got a couple colleagues in the audience there too, Michelle and Charles, shout out to you guys. And basically, Moonshot Ventures, we're an impact investment fund that focuses on Southeast Asia, climate and sustainability. Previously, Moonshot Ventures was actually managing the Indonesian Women Empowerment Fund and the She Disrupts Accelerator. Now we're kind of shifting our focus towards climate and sustainability. Aside from that, I also wear another hat with Climate Starts with C, which is Karina and I's newsletter that we publish every week on climate topics across Southeast Asia. So I'm just going to talk a little bit about this. So again, I mentioned we are a climate newsletter that publishes weekly about topics in Southeast Asia. We've published about 34 issues now, and 6 issues specifically on climate finance. And actually, we did a co-authorship with Matt on our nature-based solutions issue there, I think issue number 24. Quick show of hands, who here is a subscriber to our newsletter? All right, I see a few hands. Let's increase that number, shall we? I have a QR code up here. If you're not a subscriber yet, I'm going to pause here. Please do sign up for the newsletter. All right. Sorry, shameless plug there. I had to do it. All right, let's move on. So let's dive into the meat and potatoes of this presentation. So there's a financial paradox that's happening right now in Southeast Asia with regards to venture funds. The amount of dry powder, and no, dry powder is not a powder from Colombia. It is the amount of committed capital in venture funds in Southeast Asia is actually at an all-time high. It's actually about 16 billion or so in 2022. And the reason for this is, if you think about it, right? Taking a step back 10 years, 2013, 2014, that was when the first tech startups in Southeast Asia started to emerge. You had the likes of Bukalapak, Traveloka, Tokopedia, Gojek, Sea, Shopee. They started to launch, and then basically in the last 5 years or so, they actually matured enough to become unicorns and even IPO, right? So because of that asset class doing so well, it's actually crowding capital into the venture funds. But then what's a little bit strange, if we jump to the next slide, is that actual venture funding to these tech startups in Southeast Asia is not materializing. So even though there's committed capital in the form of dry powder, it's actually not being deployed. Well, why is that? That seems like a paradox. Couple reasons, but it primarily stems from the fact that VC funds are being very conservative and cautious right now. And the reason for that is if you look at some of the other tech startups that have sort of started to scale quite a bit in the last 5 years, maybe they scaled a little bit too fast because it was easy capital, and some of them have actually come crashing down. So if you look at the education technology sector, edtech, you see the likes of Xenios actually shutting down. If you look at the agri-tech sector, the agriculture technology sector, TaniHub, another failure. If you look at the financial technology space, fintech, Investry, some scandals happened there. So understandably, investors in the VC, Southeast Asia VC space are quite conservative right now. However, there is a bright spot in the venture capital funding space, and that is climate tech. So from 2018 to 2022, I believe, yes, there was a 20x increase in the amount of capital that venture funds were deploying towards climate tech startups. And it started as a mere $50 million, which is like the size of a medium-sized venture capital fund. It reached $1 billion by 2022. So that's a positive sign. It's a good trend, but is it enough? Well, you can see here, if we take a step back, venture capital is just one asset class that's part of private funding, right? So here we have overall private funding. Globally, it actually reached almost $200 billion. And as you can see here, it was mostly going to, it's kind of hard to see, but the black graph is power sector. The light blue is transportation. So that's like 2/3 of it going to power and transportation. Very small amount of it is actually going to like nature, agriculture, land use, etc. In Southeast Asia specifically, the figure that we see is 5 billion out of that 200 billion. It's only 2.5%, pretty small. If we take a step back again, and this is a chart that I think Renato might have shown earlier, and that Matt may have shown as well, the actual amount of climate finance that's going into these types of startups is very small, and it's part of a bigger picture, right? So if we look at actually the entire amount of climate finance, whether public, private, etc., and we compare it to what's actually needed, I was fortunate enough to go to Ecosperity 2 months ago in Singapore and heard Gillian Tan, who's the Chief Sustainability Officer of the Monetary Authority of Singapore, talk about the need for $4.2 trillion worth of financing that's needed specifically for sustainable development goals in developing countries, right? So if we look at, go back to this, you can see again, this is globally, $200 billion, $5 billion only going to Southeast Asia. So there's a huge funding gap if we peel the onion and look at specifically the region of Southeast Asia. Let me jump forward and talk a little bit about the specific parts of that funding gap that are even more scarce. So climate finance is obviously a very big term, and it's a big number, and it includes a lot of different subsectors. So if we peel the onion in two ways, there's largely speaking adaptation and mitigation, right? 95% or so of all climate finance is actually going towards mitigation, and only 5% is going towards what we call adaptation and resilience. So mitigation is basically how do we avoid future emissions of carbon dioxide, or rather greenhouse gases, because we also include methane there, we include CFCs, etc. And then adaptation is like how do we deal with the effects of climate change as they're already happening. As we know, the past few months in Southeast Asia, there's been crazy heat waves, there's been droughts in Australia with wildfires, there's been flooding that's happening in Pakistan and the Middle East. The effects of the climate crisis are already here, right? But only 5% of that climate finance is going towards adaptation needs. So that number needs to increase drastically. If we look at Southeast Asia specifically, the region of Southeast Asia, it's a very low-lying region. A lot of people live in coastal communities. So the effects of sea level rise are going to impact Southeast Asia more so than most regions of the world, right? In fact, 19 out of the 25 cities that are most exposed to sea level rise are actually in Asia. Then we layer on a gender element on top of this. So actually, if we look at the impacts of climate change and look at it through a gender lens, we see that actually the impacts of climate change are actually felt mostly by women, and disproportionately so compared to men. And as we'll see in the next slide, it's also the case that women are not funded as often as men when it comes to being founders of startups as well. So there's also a gender element that's layered onto this that sort of exacerbates the problem. So let me talk a little bit. This is quite a complicated chart, so let me try to break it down a little bit. But how do we catalyze more capital to these sort of early stage startups that are making an impact on climate sustainability at scale, right? There's sort of this, Matt was talking a little bit about pre-seed, seed stage, etc. I like to break this down in terms of sort of the initial concept. This is sort of like the idea stage. then coming up with a prototype, then eventually finding product market fit, and then eventually scaling that. So what we usually see in the tech space, in the VC and the tech space, is there's usually this valley of death that happens right around the time when a startup is working on their prototype. They're struggling to find product market fit, but they can't quite get there. And usually investors, they want to see traction, and they want to fund startups that are at this stage. So usually there's a gap of capital here in the so-called valley of death, and really you need a different model. As Matt was saying earlier, there's the wrong money. There's the wrong scale and the wrong money. And this is actually very obvious from this chart. And what's the solution to this? Well, I think, from what I've seen in my work, specifically with Catalyst Fund while I was working in Africa, is their model, which takes sort of a hybrid approach of, yes, the startups need capital, but what kind of capital? Financial capital, but also human capital. So we identify the high impact ventures. We then support with patient capital. And then we provide technical assistance or venture building support to help them grow sustainably. And I'll give an example of this in a second. So case study, Farm to Feed. So it's an agriculture technology startup based in Kenya. It actually started off as a Kenyan food rescue NGO during the pandemic. And the problem that they were actually trying to solve was twofold. There was a lot of food scarcity in urban centers, especially the densely populated urban centers, the so-called slums in Nairobi and other big cities like Mombasa in Kenya. But at the same time, there was actually a lot of food loss that was occurring at the point of what they call the farm gate, right? So if you go upstream and you look at the farmers that are actually producing the crops, about 30% or so of their produce gets rejected by the so-called off-takers who are distributing their products. And usually it's for, pretty weird reasons, like, oh, your carrot, it just doesn't look pretty, or your potato is a little too small. So they get rejected for that, and basically that produce will just go into a landfill where it rots and then it produces methane, right? So these two women co-founders, they started this during the pandemic as an NGO, but they wanted to scale this. They wanted to see if this could be actually a commercially viable model that could be venture-backed eventually. So enter Catalyst Fund. We entered the picture, we gave them venture building support, and what did we do with specifically the type of support that we did? So we did platform development, which basically was building their digital application, helping to set up all their back office systems so that they could corral the farmers, manage the logistics, etc. We then did a rebranding. They used to have a very simple WordPress website, typical NGO website. Helped them do a rebranding to make it prettier, including creating this logo. Helped them with the go-to-market strategy. So in the beginning, they were just distributing to small-scale supermarkets. And we realized, look, if you want to scale, you got to go B2B, but like big B2B. And in order to do that, we identified, okay, there's a catering company for airlines called Sky Chefs. If you can actually produce enough volume consistently per month for Sky Chefs, process the vegetables in a certain way that they'll fit the requirements and get the HACCP certification, which is basically a food safety certification, boom, you just unlocked a massive account. So we help them with that, go-to-market strategy and operational excellence. We also help them recruit a few people on their team, and also did a feasibility study on carbon credits, which basically was not feasible. And then because of that, we unlocked a seed round for them. We got backing from the GSMA, which is a large organization of the mobile phone operators, Mercy Corps, which has a venture capital fund, and then IFC has a Tech Emerge program, which funds specifically these types of solutions, as well as an impact investor called Renew Capital. So I really fell in love with this model, and that's actually what drove me to come and join Moonshot Ventures, which I just joined last month. And that's really the same type of solution, same type of problem that we're solving. So it's at the nexus of climate adaptation and sustainability, specifically with the gender lens. And the problems that we're solving, again, only 5% of climate finance is going to adaptation and resilience. We want to solve that. We want to focus on that in particular, not mitigation. Women-led businesses, again, similar problem. Only 5% of VC funding is actually going to female founders. So that's a problem that we wanted to solve as well. And where we see ourselves fitting in is right in that middle of that Venn diagram. So very similar to the problem that I was solving in the previous slide in Kenya, albeit now in Southeast Asia. So I think with that, I have finished my slides, and I think I've offset Matt's time. So I'm going to wrap that up, but happy to talk to any folks during Q&A or during the networking session. Thanks a lot.
Thanks, Massi.